The month of September started really positively. We saw markets up around the world. The US was up over 3% for the month and up over 7% for the third quarter of 2025. This is on the back of the Federal Reserve in the US reducing interest rates for the first time in a year now. We saw a lot of the technology stocks really performing strongly on the back of this, but the market as a whole was still quite concentrated around those technology stocks, and we still saw some of the more consumer-facing stocks and the healthcare stocks lagging for the month. One of the other strong drivers of the market returns for the month was the whole artificial intelligence theme. And we saw news of OpenAI and NVIDIA's discussions together really sparking that. The emerging markets, however, were a lot stronger than developed markets and have been so far this year. I'll show you the figures later on. This has seen the emerging markets outperforming developed markets by about 10% so far year to date. Markets like China, like Taiwan were some of the main drivers of this outperformance. September was a really strong month in South Africa and driven particularly by the precious metals miners. We saw that September was the strongest month so far this year, and also on a quarterly basis, it was the strongest quarter that the JSE has seen in the last 5 years. If we look at the market, the JSE equity market just for this year up 31% so far. So some really strong drivers behind the South African equity market. September was a month where we saw some big negative macro things happening. For example, in the US, the shutdown of the US government because of deadlocks in terms of negotiations between the Democrats and the Republicans. And in South Africa, we've seen consumer sentiment and business sentiment coming out a bit softer than expected. And despite that, we've seen markets really pushing ahead strongly because of essentially lower interest rates globally.